Do you want a best investment strategy for long term? Because only in long term you will be able to achieve results, you will be able to achieve financial freedom and live happier, right? So we are looking for returns and happiness in the long term. And I'm going to share about a new NFO, ICCA Prudential Passive Multi Asset Fund of Fund, which is new in the market. So I'm just going to share about that. Remember, there is a active fund which is ICICI Prudential Multi-Asset Allocation Fund. The same concept but in a different manner. I have done a video long time back. You can go and refer that video also. And today it's all about a new NFO which is passive. I'm going to share about that. Hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Mutual Fund Plan, One Page Stock Market Plan and Money Leaks. I help in multiplying your money even when you are sleeping. So let's go into today's presentation on ICICI Prudential Passive Multi-Asset Fund of Fund, because once you go through this, you will get a fair idea why you should invest in this fund if you have not yet invested. Okay, so there are multiple problems for choosing a fund, right? Just look at which fund to select, which stocks to select, which timing should I invest now or the future, sizing, how much should I invest, lump sum or small or whatever, and taxation. Will it be long-term capital gains, short-term capital gains? And this is the reason they have launched the passive multi-asset fund of funds. The NFO is from December 27th, just after Christmas, and up to January 10, you will be able to invest. Okay, the this all these things, selection, timing, sizing, and taxation, everything will be taken care if you are choosing this NFO, and that is the reason. And just look at in the last from 2008 till now, gold has given 11.6%, global equity 9.48%, and I'm just looking at the last column. Okay, last column CAGR, and equity 8.94, debt is 8.93. So if you have stayed invested in particular asset class, you may be getting different returns. But if you have been using all these things, that is what is called as asset allocation. So I always say that you should invest in gold whenever there is a market condition favoring gold, then you should invest in equity when there is a market condition favoring equity. So similarly, that is called as prudent asset allocation. This fund is going to solve that issue. You don't need to work out, you don't need to worry about when should I enter, when should I exit. All these things will be taken care by this investment, because just look at market has been range bound for a particular set of time, whereas in other things market equity MF flows increases. That is the time you will see more equity inflows, market will keep correcting. So this is what, so when the equity is correct, managed in a flexible manner, March 2020 it gave 80% return. So we everybody corrected by close to bigger returns. So if you had invested in that, the next 1 year returns would have been very much higher. This is what this fund is going to do it. And just look at funds where equity is managed in flexible manner. Jan 2020 51, Feb is 50%, whereas no major change. Whereas there is a flexibility means March 2020 they increase the equity allocation to 80%, so that you don't need to worry because you don't know what to do, but market conditions will determine, and this fund managers will help in investing in equity instead of staying in 50-50 manner. That is a differentiating factor of multi-asset allocation fund. So the allocation, the conviction, and also the identifying themes. Is it sectoral? Is it global equity? All these things matters, because earlier this multi-asset allocation fund didn't add global equity exposure. This fund is going to solve that also. And if you're doing it by yourself, the taxation will be a problem, and also is it a domestic, is it a long term global equity, all these things will create a problem. Whereas if you're investing in this fund, it will solve that issue to the everything, it will solve that issue. In a nutshell, challenges faced by the investor are, you all know this, right? The cost and taxation, how the interest rate cycle move, because if RBI is increasing or decreasing, it will have an impact. Should I enter gold or not? Many people used to ask, is this fun? Is this NFO right thing for me? What should I do? Global equity. So many questions are surrounding an equity, surrounding an investor. For that simple concept, we have a simple solution: ICICI Prudential Passive Multi-Asset Fund of Fund. Okay, so this has the attribute of all these things: selection, sizing, taxation, and timing. Everything is taken care by if you are investing in this fund. Okay, so what they are going to do, but they are going to use act, which is allocation of allocation across wide range of asset classes: gold, equity, global equity, and also all these things in a prudent manner. And based on, they are going to use index fund or ETF. Based on that only they are going to invest in this, invest your fund in this through this mutual fund. Okay, taxation is efficient, and I'll be touching upon in the next few slides. And see, this is what they are going to do. Domestic equity or ETF and index fund 25 to 65%, debt ETF and index 25 to 65%, gold ETF maximum 15, global equity ETF and index fund 10 to 30%. So it is a variable composition. So based on the market condition, based on the macro indicators, they are going to shift. And even in debt, what they are going to do, equity domestic, and just look at this is what each asset class is considers: equity domestic, equity international, gold, debt, all these are considered so that everything works. And if it is a equity ETF in India, they are going to use market cap based ETF for fund, index fund, sector based ETF for index fund, and factor based low volume alpha, low volume momentum, quality. These are all funds which many of people are not aware of, but this fund is going to use that. In case of debt, they are going to use liquid category and gilt ETF, which is a government bond funds, and target maturity products. All these are debt funds. ETFs are existing. And gold, they are going to use gold ETF directly. And in case of international equity, they have identified 30 themes. So they are using gold mining ETF, China based, country specific, and also technology driven. All these things are considered small cap, emerging, everything are there as part of this portfolio. So 30 ETF, among that they are going to use it. So it's well diversified. They are going to use it. The valuation, trigger, and technicals, based on this only they are this is the investment approach, the VTT, valuation, trigger, and technicals. They are going to use it. So historically, right now the market is very well ahead. Valuations are quite high. Market cap to GDP is almost at almost near time high compared to 2007-8 period. And investment in global, just look at it, the premium is very high in India compared to global market. So even in debt market, the value, it's very, you need to be cautious because interest rate is going to change and it will have an impact not only in India, even in US and other global markets. Interest rates are changing because of the change in inflation rate. So you should be cautious in this. And what are the triggers? Just look at capital investments. Is it increasing in India? Private and government together, and business and consumer sentiment. They need to track the RBI data and macro parameters. What is the interest rate? Current account deficit. What is the fiscal deficit? Now the new budget will come by the end of March month. And what is the inflation? Is it going to increase? And global outlook for now with Omicron threat and China growth outlook, will it go down because of the real estate issue, Evergrande issue? All these things are macro indicators and triggers. You should be very cautious. So this is what each sector wise, based on the last almost from 2013 they are given. Just look at not all the sectors or factor based things will go together. So whenever it is a cycle, I always call it as contrarian a cycle investing. Based on that, if you look and invest, it will grow. But as an investor, it's really difficult to track each and everything and to make money out of it. So that is the reason you should always go for all these are datas globally, internationally, everything they are given, themes wise they are given. So this presentation is available to everyone. If you want to go through it, it is available, right? So what this fund is going to do, in a summary, they are going to mix the each asset class, tax efficient structure. You're going to get debt. After 3 years, you're going to get in 20% taxation based on indexing. So it's going to be much better compared to the FD, and aims to generate risk adjusted return. So you're going to get at least around 10 to 12% over a long period of time. It is for a people who wants to take moderate risk, right? And if you're not invested in, and your portfolio is monitored regularly, so you don't need to worry. Even though it's a passive investing, even though they are investing in index and ETF, the expense ratio is going to be around 1 to 2% because they are going to invest in, if you are in regular, if you're going direct, and still the expense ratio may be within 1%, but the tracking error, because there are in international market there are 30 ETFs, and in local market they are going to invest in so many companies, right? Let me repeat, the minimum application amount 1,000 rupees if you're starting now, and the ETF value and everything you will come to know only after launching, because based on the investment amount what they collect, and also based on other ETF they will compute and look at what is one ETF value, one in this is a fund of fund model. So they collect fund and they invest. The NAV will come to know only after collecting and collating the data. So if you are never invested in a passive investment, and if you're looking to make money, make in passive allocation towards multi-asset model, this is one fund you can look at considering. So, and also this is a asset allocation. If you're not done it, go and invest in it. And if you're a conservative investor, if you're not invested in a mutual fund, you can consider investing in this mutual fund. So kindly look into this mutual fund if you're not done it. And again, expense ratio I explained, but the tracking error, because they are going to invest in 30 international funds and index funds, and even in India they are going to look at so many index funds and also gold market, gold ETFs. So there will be tracking error for sure. So it will be around, even though if it's an ETF, even though if you're investing direct, the expense ratio along with tracking error may go up to 2% or so. So this is one thing if you're so much worried about that. And this is purely for I'll say conservative and moderate investor more than any more than active investor. Okay, so only for them, because you will get better returns in other funds. If you're much clear about mutual funds and active mutual funds, go for it more than this. Thank you so much for watching. Please share this video with one friend who has not invested in mutual fund and who is thinking for a very long time. Thank you.